What is going on, you guys, and welcome back to another episode of Stock Battles. This will be our first battle since the recap.
Yes, it is. Yes.
And AKA, I got some work to do, so I'm bringing the fire today.
Bringing the loaded pistol for this one, are you?
One thing I will say on that recap, if you guys missed it, we'll link it up, or you can go find it on the channel. You're on a bit of a cold streak on the past few. I think basically lost the past four. I'd like to see that
losing or behind in the last four.
I mean, yeah, you're losing. So
yeah,
let's keep that streak going today, and I think that will be the case with my pick.
Good. Well, I know which company you're picking, and I'm really shocked that you're picking this company. But let's get started.
I know I don't like these types of companies because, many reasons. But
this is a battle.
This is a battle. You gotta do what you gotta do. And right now, I'm liking the stock. And here we go. Let's go. It's the company Pfizer. Your favorite company, actually. One of your favorites.
One of them, yeah.
Ticker PFE, today trading for $37 USD. It is down about 35% off highs, and they are offering a 4.36% dividend. We're going to look back at the dividend in a second, but nevertheless, you actually picked Pfizer a little while ago.
I did. One of the stock battles I picked Pfizer, yeah.
So I don't know what the rules are in me picking your pick, but I'm picking at a different time. In fact, I'm certainly getting probably a better price than you paid.
I think it's fine. There's got to be maybe a gap between, but you can't go back to back.
Can't go back to back, but I mean, different scenario, different time, and I'm liking the stock at these levels. And
I like it too, actually, just FYI.
Nice. Well, just to recap, I mean, why is this stock dropping? Taking a look at their recent earnings report, numbers were down across the board. So if you look, you're going to see red across the screen with total revenues down 28%. In the recent quarter, net income, very similar story. And this is a very expected slow down or come down from the COVID boom, right? If we actually take a look at their product breakdown, we notice a huge revenue contributor has been these COVID-related products. And in particular, the names I'll not try to butcher, but Paxlovid,
yeah.
And Carmetry.
I'll leave that one with you.
Something along the lines of that. You guys can go look them up. But obviously, these are both vaccine or treatment-related products, and they've made a huge portion of revenue over the past couple of years. These two have performed actually poorly, or we've seen a decrease in numbers, but that makes a lot of sense given that these are very event-driven specific drugs, right, as the COVID pandemic has subsided. That said, they are actually expecting these numbers to somewhat gradually taper off and for the foreseeable future have somewhat of a baseline. But what I was actually more impressed with Pfizer is if we look beyond these COVID-related drugs to more of their core of their business, right? The many other products they have, you'll see that across the board, revenues were up actually 5%. Again, COVID drugs aside, and we see many of their popular key drug families actually posting good positive growth. So that's something I like to see, right? We do section them off. You got the unique case, if you will, and then more or less the core operations. That's steady trucking along. Actually, they confirmed their guidance for achieving 7 to 9% growth. Again, COVID drug aside, because those are going to drag them down, expected, with the majority of their growth lined up for the second half of the year. So the next 2 quarters, or the last 2 quarters of the year, they do have some big upcoming launches. You can see from the slide today, and I think that might line up well with some optimism with the stock. In more recent news, I would give this more or less a negative, if you will, to potential negative to COVID. They did have a big acquisition of Seagan as a cancer drug or a cancer product, and they paid $43 billion for this deal. A pretty aggressive acquisition. And there are analysts arguing that they did pay a pretty steep premium on this. But this is kind of the name of the game for a company like Pfizer. I was going through their website, and if you scroll through, which you guys can take the time to do, and look at the list of products that they have, it is just
enormous.
It's enormous. It's really crazy, actually, at the end of the day. So growing by acquisition is kind of the name of the game. It would definitely put pressure on their earnings, for example, over the shorter term, because they have all this debt, additional debt to worry about. But I do think over the long term, it's what's worked for Pfizer, and I think continuing to expand the pipeline is just, like I said, it's the name of the game for Pfizer. What I think just more top level is why I think this is a good long-term hold and why it may be just a nice time to add today. This is data that we all kind of know on the channel, but it's from 2017 and it definitely gets the point across. But as a population, we are getting older, right? We see this kind of more pyramid looking chart, if you will, on the left, to more, I don't know what you'd consider that, more like a vase looking thing on the right.
Like clay therapy or something.
Something like that, molding the demographic with time. And that's obviously looking out in a couple decades. But as, the population ages and ages, fact of the matter is people get more sick. They get more need for medicine, more need for all sorts of stuff. Don't get me started on the GMOs in our foods and the pesticides, and they're going to cause all sorts of things down the road. Yeah, it's just crazy, right? Nevertheless, this is a clear long-term benefit. Funny to say, but it is a benefit. It is something that is a trend that works in a company like Pfizer's favor, where you have this massive demographic trend where people are going to need to use their products. It is as simple as that. There are only a handful of players. There are a lot of healthcare players, but there's a handful of these large players in the space. And I do think that after the 35% drop, Pfizer is looking attractive. And really what I think is very, for our dividend investors, what I think is great about Pfizer stock right now is you're looking at a very, very reliable dividend. So the 4.36% yield is actually a great starting yield for Pfizer. I mean, 4% yield across the board is a lovely yield to pull in. Especially when we look at the dividend grade metrics. This is from Seeking Alpha, but we see pretty much A's, A pluses, a B on dividend safety across the board. Payout ratio sitting at only 26%, and they are growing it modestly at 5% compounded. 12 years of history of actually increasing these. And why I say the 4% yield is nice today is one of the tactics I like to use, I know you do as well, Dad, is when you monitor one of your favorite long-term holds over a long period of time, depending on how the share price is moving, if it's getting inflated or if it's kind of dropping down, you do see that starting yield, move in correlation, right? Actually opposite than that. But as we can see from this chart, basically Pfizer tends to pay a dividend in that 3% range. And again, it's not growing very much. They're modestly growing it. So when we do see these spikes, when the dividend does go up, let's say above that 4% range, it's not because they're increasing it. It's because the share price is coming down. And for me, again, for a company like this, which is a leader in the healthcare space, so established, already continue to do their thing going forward, this dividend yield can be a nice indicator to say, hey, maybe there is a pocket of value that we're seeing for whatever reason. Again, I think this is, coming off of the slowdown from the COVID drugs. A lot of people are going to see the revenue numbers. They're going to see, hey, companies, maybe not looking as optimistic, not posting green earnings, from a high level. But like I said, because the operations of the fundamentals of this business, the foundation is still growing well, I do think today paying the 4% yield is a nice time to pick up Pfizer. I think I actually added some for myself. So my money's where my mouth is in this one. But I had to kind of I had to go with the big bad Pfizer for this one just to win the battle. You got to do what you got to do to make up on the scoreboard. So that's my pick for the day.
That is your pick. And you can tell the gloves are off because I think we have this theoretical 5-minute time limit on these presentations. And I think that's got to be closer to 7 or 8. But
well, we did have an intro that was probably a minute.
Yeah, okay.
So I think that's pretty accurate.
Good talk. And yeah, Pfizer has been showing up. I have various screens that I use to keep track of opportunities. And Pfizer has been showing up there a lot in the last while. I have a full position for me already, so I'm not out buying more of it at this point. But yeah, I like your pick. You've known for a long time. I've liked Pfizer as a company. So
yeah, it's funny. It's funny. Like as a younger person, I mean, I don't really get commercials about Pfizer drugs or their products. Maybe if I'm watching TV and there's something like on a basketball game or whatnot.
Right.
But it's just such a product for a different demographic. But the reality is, there's so many people out there. I'm sure many of our viewers, they're seeing these commercials.
Yeah, I mean, these guys advertise a lot, all the drug companies. And, to your point, I'm not trying to bolster your pick here, Brandon, but to your point, demographically, there's just going to be an increasing demand. And it's not stopping and it's not optional for the most part, right?
Not optional, no.
Some of Pfizer's products, I think, are optional, but not all of them, right? So if you got some cancer or something along those lines, you're gonna treat it. So yeah, so I'll say good pick. I'm looking forward to sort of countering that with my pick. So I'll get into that now, but before I do, actually, I just want to take a moment and thank the sponsor for today's video, which is Passive. And Passive is a great tool for passive investors, whether you're beginners or whether you're more experienced. If you're managing your own investing, Passive is the tool. Using it, you're going to be more organized, you're going to make better investment decisions, importantly, feel more confident in managing your portfolio. It makes it so easy to connect your entire portfolio from your brokerage. That is incredibly powerful tool for you. You can manage your portfolio, you can analyze it as one single piece. Of course, that saves you time, and it gives you more of a 10,000-foot view as you're looking at your investment positions. Passive returns so much value in time, in money. It eliminates the need for those cumbersome spreadsheets we all try and finagle and make work. There's no more equations. There's no more calculating how much you need to buy, how much you need to sell with each particular investment. So that's really important.
Oh, yeah.
You don't have to log in and place separate trades, which is normally the way. What you do here is with Passive, you set a target They do the heavy lifting. You just need basically one click to execute the trades to rebalance your portfolio. So it really will change the way you look at your assets. If you're considering big changes for your portfolio, you can create a model that will allow you to understand the impact of every move that you make before you actually make the moves. They also, I'll say here, they have notifications, and it gives you sort of, I think, the feeling of freedom. So you don't have to monitor things all the time. The portfolio is self-managing. Well, you're doing more things that are more important to you. When the market changes or new cash hits your account, you'll be notified so you can decide what to do. Now, Passive Elite, I think it's a bargain. $99 a year for Passive Elite. If you are a Quest Trade user, it's free. And if you're not a Quest Trade user, you can still, there's a free version of the plan as well if you want to try it out before you go to the full $99. And there's no credit card required to get started, so it's worth trying it out. So I will put a link in the video below that you can check Passive out once you've voted on the winner of today's stock battle. So let me get on to my pick, Brandon. And interestingly, just a quick aside, we were at a Blossom Social event last night and talking about a bunch of different things. But a common theme that kept coming up was TD Bank. And my pick for today is TD Bank. And I'm a long-time shareholder of TD Bank, currently trading at about $78 Canadian. Now, I'm not going to get too deep into it because everybody watching this video knows TD Bank. It's Canada's second largest bank right now by market cap, as you can see on the chart here. And it's battled over the last few years with Royal Bank to be the market leader. Question, in a stock battle like this, why now? Like what would have me leaning towards that? If you look at the performance, it's really suffered over the last while. I want to flip back right to basically COVID. And so post-COVID, the stock was trading at around $52 a share. It went up to 100, just over 100. Now it's retraced back to around the $79 mark. So around a 20% decline there. Look at the long term. Look at the franchise here. You look at over the 20-year number, TD is significantly higher than its peers, with Royal Bank giving it some good competition there. It's definitely, in 2023, though, it's been the hardest hit amongst its peers. We can see here down, 10%. Basically, TD has been punished. So
the biggest loser.
It's the biggest loser, you would say. So the question really becomes, in a battle like this, what are the problems right now that it's experiencing that's causing it to drop like that? Are they temporary? Has there been a fundamental change in the company? And I'm going to start this battle in a kind of a rare fashion. I'm going to tackle right off the bat the challenges that TD is facing to try and look at why are we seeing the decline. So you may have seen in the news, TD, as of April, was the world's most shorted bank.
Boo.
Of all the banks in the world. It's about $6 billion in short position now. That is 5.5% of the outstanding shares. So it's not like the entire bank is being shorted if you put it in perspective. Now, First Horizon. So February of last year, TD agreed to merge/buy First Horizon. They were going to pay about $13.4 billion US for that acquisition. There was a lot of debate. In fact, you just talked about Pfizer and how their acquisition, there's a lot of debate as to whether it's accretive or whether it's a good decision. A lot of debate over whether TD should follow through with First Horizon. Now, as of a week or a couple of weeks ago, I guess, that deal's been canceled. First of all, there was regulatory approval that they couldn't get, partly because of the investigation that TD's under, but also I'm sure TD is happy to get out of this deal. And as an investor, one of the things I think right now is it might be a good time, it might be a positive for the company. They will pay $225 million in compensation for backing out of the deal. First Horizon was expected to bring about $1 billion worth of revenue into the company. So that's the positive, right? But they were paying $13 billion for that. So like I say, I think right now for the TD shareholders, given everything that's going on in the markets right now, this is the best decision. We think of the regional bank problems that the U.S. has been experiencing. Well, First Horizon is a regional bank, right? So you think of the Silicon Valley, you think of the First Republic and all the issues there. When we look at the price of First Horizon since the deal was announced. So if we look back to February 2022, when it was first announced, the stock was trading at about $17.50 a share. It went up as high as $24 on the news. But when the deal was canceled, you can see on the stock here, there's a significant drop down to around the $10.60 range. So obviously the price of they were paying a certain price. Where you look at where it's trading today, not a very good deal. Market cap, it follows the same pattern. It was about $10.5 billion back a year ago. Went up as high as $13 billion. This is the market cap of First Horizon. Currently at about 5.7. From a valuation perspective, let's look at the compare the U.S. bank comps, and we see J.P. Morgan, Bank of America, Wells Fargo, Citigroup, the big boys down there, they're all trading in that sort of 8 to 9 times earnings. So when you look at that compared to the projected 13 and a bit for this acquisition, obviously they're overpaying. They would have been overpaying. Right now, with all the turmoil going on, a metric that's really important, and this is important for all banks, but TD has always been a market leader in what's called Common Equity Tier. So CET is the acronym that you'll see used. The current climate, which is placing so much of an emphasis on security of the banks, is one of the most important metrics. And what it does is it measures the core capital against the risk-weighted assets of a company. So right now, we see from the most recent TD report, just the other day, their CET1 is at 15.3%. With this acquisition, it would have fallen all the way down to about 11.5, somewhere in that range. So it would have gone from one of the best to one of the worst CET1 ratios in the business. So that's one thing there that I think is good that came out of this. So it gives me more confidence in buying the bank right now. The recent earnings report, a lot of negativity. The entire Canadian banking industry, with the exception of CIBC, basically the earnings reports were negative. We just look at the reports here. Reported earnings, $3.4 billion, down 12%. The reported EPS, down 17%. But look at the positives here. Yes, the earnings were down, but look at the revenues. If we look overall, revenues up 10% year over year. If we look at the expenses, though, that's what caused that big difference there. Expenses up 16% year over year. So we kind of get the picture here that there's problems, but they're not necessarily on the revenue side. So there's a lot of good stability there. Now, I want to show a chart I don't think I've shown on the channel here before, and this is a chart that I've pulled up from Koifin, which is one of the charting platforms that we use. And this is what they call their percentile rankings. And if we look at sort of the first column here, this measures TD's current metrics against their 10-year history. And for example, if we look at the price to earnings on a forward basis, so NTM, next 12 months, trading currently at 9.3 times. The 3 here basically means it's trading at the 3 percentile of its 10-year history. So 97% of the time, other than now, it's been at a higher multiple than it is today. So that really, if you're looking from a valuation perspective, it's rarely been this cheap. But if you look at it here on a chart, you can see the trailing 12 months in the blue, you see the forward in the orange here, and you can see how if you look back over the chart, how the low levels that they're trading at right now. Currently trailing PE 9.9 times, a 5-year average is 11.5. Looks maybe cheap. If you look at their forward, 9.3, the 5-year average is about 11.5, just over 11 actually. So you see again, good valuation there. Price to book, trailing 12 months, 1.4 times, the 5-year 1.93%. Really quickly looking at the dividend. Brandon, you mentioned Pfizer's dividend. Got you beat on this one, at least. TD with the recent share price decline and a very, an incremental, but a recent increase as well, currently yielding 4.91%. So there's an opportunity right now at today's prices to lock that in. It's got an excellent track record going back to 1857 when they started paying dividends and have not missed a year since then. Finally, here from a price target. I always like to look at this and I use it as a guide, but obviously it's subjective, but Wall Street is giving a price target here on average of about $92 a share, currently trading the $78, $79 range. So there's about a 17, 18% upside potential there. So I'm looking at this right now as maybe one of those rare opportunities that you kind of, I don't say back the truck up, but you take a position here or increase a position if you have it right now. I mean, I don't see anything that has permanently changed. TD, it's an excellent banking franchise, right? They've got their investment banking, they've got their wealth management. With the capital they have on hand today, lots of room for growth, right? And they've freed up the $13 billion that they're not spending on First Horizon. So I don't expect this to happen overnight, but I do expect this to be a good, attractive entry point. I realize this is a 1-year competition, so we'll see. I think both of us here are taking a little bit of a gamble here on something maybe producing returns longer term, but we'll see how it plays out over the next year. So my pick is TD. You picked Pfizer.
Yeah.
Now it's up to you to vote and see who you're picking for the winner of this championship, of this contest.
Well, I'm just gonna say I already know who the popular vote is gonna go for this one. You
I know,
went with a cheesy one, but you yeah. But again, that's not what really matters. Popular vote. We're going to look at the numbers because, like I said, I'm on about a 4-0 streak and you're on about 0-4 or something along the lines of that. Look at that.
Yeah, I will contest that, but
I will
but
just
maybe
say,
semantics.
first and foremost, you called out me for going a minute over, and I guarantee your segment was at
well, I felt
least
like I had free reign.
that was at least 10 minutes going through your part
once
of it.
once the barn door was open, man, it was just time to run. So.
I guess so, but no, I would echo that. Two good picks, I think, for the long term. I think we can agree as a group here that. Yeah. I think we both like. I do like the pick long term. It will be fascinating to see over the 1 year time period what happens. I think yours probably is actually a bit more jeopardy based on current events. And hey, maybe we'll organize a big bank run, amongst the community to help bring TD stock lower. That would be nice if we all just start withdrawing our money and go to crypto or something. That would help. That would help me in this challenge. If you guys are thinking about it. But
as I was speaking, I was thinking of my previous sort of more aggressive pick, which was Bosch Healthcare, and of course that just that was the first loss that I suffered, and so maybe I should have learned my lesson. It was a massive loss.
That one was massive.
Decimated.
You did.
Yeah. So for those of you who have not seen the recap. We went back a video or so ago. Maybe we'll put a link on that one. You can watch the history and see where we're at there. So,
well, hey, don't forget to leave your votes down below because we do tally them up, and every little vote counts. And I'm going to say vote Pfizer.
I'm going to say vote TD.
Yeah.
Vote with your heart. Vote which one you think will do best over the next year. And I love when people give some commentary as well on what your thoughts are, because that helps the community as a whole. But don't forget to say I vote for X, because that's how I decide where the count goes. So awesome.
Absolutely.
Well, good.
Thank you.
Fun, Brandon, as always.
Yeah, really good. I'm excited to see how this one turns out. If you guys enjoyed the video, give it a thumbs up. If you're not subscribed, you're watching this, subscribe. Check out the Investing Academy. Again, thank you to Passive for sponsoring our video, and everything will be down in the description below. If you're ever curious about our sponsor or anything else, you'll find that all down below if you just take a look at the video description. But as always, we thank you for watching.
We'll see you in the next video.